Is the euro bullish? Is it bearish? Where is it likely to head over the coming days? What are the key levels to watch? I'll have all the details in today's video, including how I'm looking to trade it over the coming days. And as always, we'll have the latest on the DXY as well. Now, before we get started, guys, if you want my help with your trading, including real-time market updates, seeing my trades live, VIP-only videos, and also the full course, be sure to check out the link in the description of this video for 85% off lifetime access. If you're on the website, click on that Join VIP link. Okay, guys, EURUSD, we talked about this over the weekend in the weekly forecast video, but I do want to touch on this again because I had a few comments there talking about how the euro closed above a key level on Friday. And I want to clarify, guys, the euro did not close above a key level on Friday. Okay, so this candle right here, this green candle, this candle did not close above these lows back here or these highs. Okay, so this pivot right through here, right around 115.85, you can see where Friday closed right at the level. And, hence today's pullback here on Monday. Okay, now, so far this week, a relatively light event calendar, and really for the whole week, it's going to be, pretty light out there. However, that doesn't mean that we aren't going to get volatility because, as we all know, with Trump in office, anything is possible. We've seen many days where there's not a lot on the calendar, and yet we still get a lot of movement from these markets. So that's the first thing to keep in mind. Now, is the euro bullish? Is it bearish, right? And to answer that, first of all, we have to take a look at what time horizon are we talking about? Are we talking about the next week, the next month, the next 3 months? And I think when you look here at this market, okay, so we've discussed this before as well, but looking here at the daily chart, moving all the way out here, you can see where the euro did recently break below this trend line from March. Okay, so all these lows back here, we had clearly a very, aggressive breakdown below this. And what I said back here when the market was breaking down is that with a breakdown like this, considering the fact that we really didn't see much of a pause here at this trend line at all, a lot of times when you get a very aggressive breakdown like this, you do get the market actually returning to this level. Okay, and one reason for that is that you get these imbalances. Okay, so these blue dotted lines, guys, are called single prints. In TPO terms, essentially what that means is that if you look at a 30-minute time frame, okay, so looking through here, going all the way back here to this breakdown, what you'll notice is that on the 30-minute, this area through here, this was very thinly traded. Okay, the same thing with this back here. And a lot of times when you get a market that thinly trades around an area like this, it does come back to that area because market makers want as much liquidity in play as possible. So if there's open liquidity back here or resting liquidity back here in this area that is not in play yet, the market oftentimes will snap back to that area to get that liquidity in play. And that could be the case here for the euro. If we had seen something, on the other hand, looking at the 4-hour time frame, if we had seen something more like this here where we got the breakdown below and then the market returned to it, right? Then of course you wouldn't have that because this portion of the move would have essentially filled those imbalances up here in this area. Okay, but instead what we've had here was a very aggressive sell-off, and now we've had a potential, at least short-term bottom forming for the euro. So we talked about this over the weekend where I do think that the Friday move was significant for the euro because you can see that we have these highs and these lows back here. You can see on Thursday this was resistance. We had to close back above on Friday following those pretty terrible NFP numbers, if I'm being honest, that we saw there on Friday for the US dollar. So of course the euro snapped back here to this area. But again, it did not close above here. Okay, so you have to anticipate the potential for a retracement of partial, a part of this move here on Friday early this week. Now, there's no guarantee that we will see the euro retrace part of this, okay? There's nothing to say that the market has to come back here to this support area down here around 115.19 or down here around 114.50. There is nothing that says that we have to get that. However, at the same time, if you're looking for longs in a market, do you want to be longing into key resistance? And obviously the answer there is no. Okay, so really for me, if you're going to look for a buy on the euro, it's got to be on a retracement, right? Not financial advice, but just logically speaking, guys, you don't want to be buying into resistance here, especially after a move like we saw there on Friday. Because the other thing to consider is that just like we have these buy side imbalances up here, we also have a sell side imbalance down there around 114.39. Now, whether or not we see the euro retrace all the way down here first before we get a bounce is, obviously up in the air. And one reason why I mentioned this over the weekend as well, but one reason why we might not get that is looking here at the DXY. Okay, so we've discussed this, again over the weekend, but you can see where we did get the DXY actually closing back below these highs from back here in June. Okay, so this was your range from June, right there around 99.35. We saw the DXY fail to hold above this. So as of right now, guys, this is a failed breakout from the US dollar. Now, the reason I'm saying that the DXY kind of hints at the potential for the euro maybe not getting all the way down here around 114.50, I'm sorry, is that the DXY, if you look here, okay, 99.35 comes in here, 99.5, this low from right back here is just above that. So that gives you a pocket of resistance. Furthermore, we have these highs back here and these lows. This was an equidistant channel, and the DXY is now back below this, okay? So if we were to get from the US dollar index a move, a bounce from support down here, a move back up here toward this area, whether it be Tuesday, Wednesday, Thursday, whatever it might happen, if we were to get this, okay, still a big if, but if we were to get this, this is going to be resistance. Now, for the euro to come and test 114.50, we would probably need the DXY testing or taking out this imbalance up here around 99.87. Okay, now it could happen. However, you have to look at the event calendar as well. And like I said, it's a pretty light week here in the Forex market. So I have to ask myself, what is it that is going to trigger the DXY up here? I think what's more likely is if we do get a bounce here from the US dollar, some relief here early this week, is this pocket through here around 99.35 up there toward 99.5. This, in my opinion, is going to be the one to watch. Now, whether or not we see a wick up here, maybe we do, maybe we don't. But I think that, again, this here through this area is going to be the one to watch here for the DXY. Now, how that translates to the euro, okay, could just be a move down here into this area around 115.19 that we talked about over the weekend as well. So this right here is the June 8-day composite point of control. Fancy way, guys, of saying that this level through here within this range, this level right through here was the most active in terms of both price and volume. Okay, so this is going to be a key support here for the euro. You can see it was back here on this candle, that Tuesday candle. It was support back here. We saw the close below. We have not seen a retest down here just yet. So bottom line, guys, I think at a minimum, okay, if we are going to see the euro rally following that Friday move and come back here toward those buy side imbalances, potentially retesting this trend line that broke down back here, if we're going to see that, guys, I would have to at least see the euro come back here in this area, right? Test this region through here. And ideally, looking at the DXY, this is very clean. We would have to see, or at least I would have to see, the DXY bounce from support down here, because again, I don't want to short the US dollar into key support. I would have to see a move back here toward this area. If we get that, then from there, if that holds up, guys, then my next targets here for the US dollar are going to be areas like this down here. So looking at the daily chart, you can see it clearly here. We have a few things happening. We have this descending channel off of these highs and lows. You can see we have the failed breakout above 99.35. And so if this area holds up as resistance, guys, then I'm looking at these sell side imbalances down there toward that confluence of support around 97.7. Okay, so that's what I'm looking at here for the DXY. But again, I think the big takeaway from this video is that, yes, those Friday moves were significant in my opinion. However, at the same time, if you're going out there and rushing into these markets and you're buying the euro and you're shorting the dollar, you're essentially doing so right into some key levels. And so I think that, for me at least, what I'm waiting for here, guys, is a partial retrace of those Friday candles. Okay, if we get the DXY up here into this area, I will be looking for US dollar shorts for that potential move down here into these imbalances, okay, following this rally. And the same thing goes for the euro, right? When we flip over here and look at the euro USD, you can see that, again, these are our support levels down here, and you've got these buy side imbalances. But in order for me to buy this, guys, I've got to first see that retracement to give us that partial retrace of Friday's candle and, offer a much better risk reward ratio, because right now I don't want to buy this right into key support. All right. So, that's the bottom line, guys. As a little bonus heads up here, I think that, like I mentioned over the weekend too, if you look at the monthly time frame, just because the monthly for July just closed up, you can see here that the DXY did close as a potential bullish engulfing candle. So the point here is that even if we do see the dollar move lower down there into 97.70, I think you've got to be really careful getting too bearish down here in this area, just because we did see a rather bullish candle last month. Okay, now with that said, and let's just look at this here to wrap up, okay, just to give some context to your trading over the next few weeks, right, or potentially even months. If we look at this channel in the DXY, what you'll notice here is this is the monthly time frame. What you'll notice is this period of price action back here and this one through here. Both of these guys back here took over 5 months, 5 months or more of price action at the lows. So if this is going to be a macro bottom for the US dollar, we have now seen, and we're in our third month, okay, so basically 2 full months of price action down here at key support. So the point here, guys, is don't expect that this candle from last month is just going to trigger a move higher immediately. While that could happen, the chances are we're going to see the DXY go sideways here for another, month, maybe 2 months, maybe even 3 months before we see some type of breakout. So keep that in mind with your trading. It's really going to help you give context to your trades over the coming weeks and potentially even months. All right, that's it for today's video. If it helped, be sure to subscribe to the channel, smash the like button. Also, join us in VIP. Check out that link in the description for 85% off lifetime access. Trade well out there, and I will talk to you again tomorrow.